What's going on, investors? AK from Fallible here. Today I want to talk about simplicity in your trading and how it will help you get much better returns over your career. So back in our school days, we were all rewarded by providing more. So more complexity, more pages written, more dioramas and stuff and glue and arts and crafts and all that crap. We were always told the more you did and the more you packed into something, the more complex you made it, the better your grade was going to be. So of course little AK was big into getting good grades because his mom told him that your grades count from preschool onwards. So if you weren't doing well, you weren't going to get into college. So I was giving teachers more and more until around 8th grade when I was told that grades actually didn't matter until high school. And after that, 8th grade was a good year. Finally got my mind off of school and onto something more important, which was being a clown. And life has been better ever since. But anyway, all of us were trained this certain way back in school, but when you come into real life, it doesn't exactly work out like that, especially in the markets. In the markets, it's usually that overly complex method that fizzles out, or even worse, blows up. And it's that simple method, executed with common sense and perseverance, that's the one that wins out. And the markets usually teach this to you in the roughest way possible. Like I said, the highly complex PhD theses, those are the ones that get spit on, and worst of all, they get blown out too. If you want an example of that, just look at long-term capital management, that hedge fund from the 90s. They had all the smartest PhDs who thought they built the best models to beat the market, and sure enough, they blew up huge. Like, look at this chart of their equity curve. Looks like they're doing great for a period of time, like, oh, good, really beating the market, then all of a sudden, oops, blow up. Those models didn't really work out, did they? And that's just kind of what you're gonna have to expect when you're doing things way too complex. And around the same time that those PhDs were trying to figure out why they blew up and what exactly happened, an unknown pool contractor out of everyone, this guy made pools, he turned $11,000 into 18 million in under 2 years. And that guy I'm talking about, you might have heard of him, his name is Dan Zanger. And he holds the world record of the largest one-year gain in market history. He made 29,000%. And the way he did it was just by executing the simple stuff he learned in William O'Neill's book, How to Make Money in Stocks. He didn't have some super complex PhD models like those long-term capital management guys. And I actually talked about William O'Neill's book in a previous video about the 5 beginning books that every trader needs to read. If you haven't watched that video, I'll link to it above. Check it out. Time and time again, you'll see that the simple methods are the ones that win out in the market. So you kind of wonder, like, why do people even get caught up in the complexity? Well, Nassim Taleb explained it pretty well when he said, "For last, though those who risk their own funds put a premium on simplicity and practicality, others, academics driven by rank and status, management consultants, economic experts, and finance analysts have an incentive to indulge in complexity and muddle." So basically it's an ego thing. And I mean, you've seen this online, for example, like Seeking Alpha in the comments. People are just debating back and forth and trying to prove how smart they are. And they're doing that not because they want to make money, but because they want acceptance from that community. They're dealing with the wrong motivations. And I personally knew a guy who was big into doing things like that. We'll call him Jack. Instead of actually making money in the market, he was obsessed with sounding smart. He just wanted to be a guru and have a following, so that's what he focused on. And you can be damn sure he never made a penny. See, a real trader is a person that focuses purely on profit. They could care less how they look to the outside world. They're not trying to get on CNBC or something. They have one goal and they're laser focused on it. And that's one of the reasons why they prize that simplicity over everything else, because they know it works. And this reminds me of that famous quote from market wizard Ed Seykota: "Win or lose, everybody gets what they want out of the market." So take a look at your own process. Is everything you're doing really necessary? Does it actually add to the bottom line? Or are some of the things you're doing just to show off how smart you are? Really take a look at your process and try to define what you really want out of the market. Is it profits or is it something else? It's always good to check in every so often and do that self-evaluation. Because even though you and me and all of us in the Fallible community, we know we're focused on the profits, sometimes we get pulled away a little bit from that and we realize we're doing things for other people and not for the profits. So like I said, always good to check back in. And I'll be going over some mental models that'll help keep you on track, including ruthless reductionism and Occam's razor. I'll be doing that in videos that'll come out over the next few weeks. So if you're interested in seeing those, make sure you subscribe to this channel and hit that bell for notifications of when they come out. In the meantime, stay fallible out there. Bye.